Hello everyone, I hope you are doing well. Can you please confirm if I'm audible or not? Just confirm it in the chat box. Okay, let's everybody get joined and let's wait for another minute. Okay, so hello everyone, welcome to another insightful session of Perspective 360 degree where we do current affair based answer writing practice in a detailed and structured manner. So if you are an aspirant preparing for exams like RBI, NABARD, etc., then this initiative is definitely going to help you with answer writing practice for the descriptive paper of phase 2. So let us begin with today's session, and today we are going to start with economic survey. And in our upcoming sessions we are going to cover economic survey only. We are going to see the different type of dimensions and the probable questions on which that could come to your exam from the economic survey, and that is definitely going to help you in order to cover economic survey in a holistic manner, and will also help you to gather a lot of data points in order to add value to your answers. So I hope the agenda for today's session is clear to you, and today we are going to talk about the first chapter, which is the state of economy, steady as she goes. Fine. Good evening, Mini. Hello, Jalak. Good evening, everyone. So I hope I'm audible to all of you. So since the agenda is clear to you, secondly, why we are talking about is because very specifically in the report section in your syllabus, the economic survey has been mentioned very precisely. So if you are following our sessions, we have already covered RBI annual report. We have covered the financial stability report, which is again very much important for your exam. And now we are going to talk about the economic survey. Fine. And we have already covered reports on trends and progress of banking also. This is something that we have covered. So I hope it is clear to you. Now, if you're somebody who is new to this Perspective 360 degree initiative, let me tell you that here firstly we give you an expected question, and you have to write the answer of this expected question in the comment box. That will be evaluated by our team within 48 hours. So today is Wednesday, so you have to submit your answer before Friday 5 p.m. if you want it to get evaluated. So let us see the expected question for today, which is discuss the key factors that contributed to India's economic recovery post pandemic, examine the impact of global supply chain disruptions and geopolitical tensions on India's economic performance in financial year 2023 and 24. So this is something, the question that I have framed using the economic survey chapter 1, because chapter 1 very specifically talks about these things, and we are going to cover all the parameters, all the dimensions one by one. Fine. So this is a blueprint that you need to follow while answering your question, where you will divide your answer into introduction, the body and the conclusion. The introduction should be around 10 to 12% of the total word limit, and the same rule applies to the conclusion also. And the rest of the word limit should be dedicated to the body part, where you will write your body in the form of heading and different subheadings, and under the subheadings you will write your relevant points that you will substantiate with the help of relevant data, facts or examples. So I hope the approach is clear to you that you need to follow while writing your answers. Now, this is the question that I have already discussed with you, and we are going to break down this question into two components, and we are going to divide these components into two different bodies, which we are going to discuss in our upcoming slides. Fine. So before we jump directly to the body, let us first see the introduction, since the question is asking about discuss the key factors contributed to India's economic recovery post-pandemic period, and then it is asking about the impact of global supply chain disruptions on the India's economic performance. So this is something that this is the information that we are going to extract from the question, and we will use it in order to write our introduction. So for example, we can write the COVID-19 pandemic posed unprecedented challenges to economies worldwide, leading to severe disruptions in economic activities and supply chains. So this is regarding the worldwide at the global level. Now, what is there in case of India? India, like many other countries, faced significant economic contractions and societal hardships during this period, with a GDP contraction of 7.3% in financial year 21. However, through a combination of targeted policy measures, structural reforms, and strategic public spending, India managed to navigate the post-pandemic economic landscapes effectively. Then after that, what we can use? We can write a connecting line. This is the line that will be used in order to connect our introduction with the body part. So how we are connecting our body? By simply writing that first we talked about how India was able to manage it, and then we can write that the key factors that contributed to India's economic recovery post pandemic are, and then are going to start our body. Fine. So this is going to act as our connecting line once we are done with our introduction. So I hope the introduction is pretty much clear to you. It is very much straightforward. Now let us move on to the next part, which is the body part regarding this question. So the key factors that contributed to India's economic recovery in the post-pandemic period. So the first factor is the public spending on infrastructure. Now the public spending, which means the spending on the public assets by the government, the thing is that it played a very important role in order to improve our economy in the post-pandemic period. How? Because the public spending on infrastructure, for example, the roads, the building of different buildings, different type of facility, different type of projects that the government launched. Let us take say for the example the Bharat Mala initiative, Bharat Mala Pariyojana, which is there for the building of highways, or let us say the smart cities mission, different type of public spending by the government, smart city mission. So when the government will do these kind of public spending on the infrastructure, what it is going to do? It is going to lead to creation of jobs in the economy. And when the jobs in the economy will be created, then it is also going to boost the private sector. How the private sector will be boosted? For example, let us take the example of Mala Pariyojana. If the government is building highways through Bharat Mala Pariyojana, then through the building of these highways, the road infrastructure will get improved, and it is going to decrease the cost of transportation with respect to the private sector, because the private sector will have the better accessibility to the routes, and it will also helps in the and it will also helps in encouraging the private sector investments. Fine. Similarly, in case of smart city project, for example, the smart city project is happening. So what is going to have its impact on the private sector? It is going to increase private sector in the real estate and also in technology. So through this way, the public spending on infrastructure is going to boost the private sector, and is going to government expenditure is going to crowd in the private sector investment. I hope you understand what crowding in or private investment means. Crowding in means when the public spending helps in increasing the investment of the private sector. So this is what this pictorial representation also highlights, that the government capex, which is capital expenditure, crowding in private investment. So for example, you can see private corporate capex grew by 19.8%, and the central and state capex grew by 22.9%. Apart from that, the economic survey also talks about the increasing appetite for the investment in housing. For example, there has been increase in the household savings because of the different initiatives of the government. If you remember, during the post-pandemic period, government had given different type of tax incentives with respect to home loans, and when there will be tax incentives with respect to home loans, people will have better accessibility to the credit, and there will be more investment in the housing sector. Similarly, when the government will create more jobs in the economy through the infrastructure spending, it is going to increase the disposable income of the individuals, and the household will be able to do more savings as compared to the earlier times. So you can see the household savings in physical assets as percentage of GDP up from 10.8% in financial year 21 to 12.9% in financial year 23. Fine. And there is another example highlighted in economic survey that the government capex stood at rupees 9.5 lakh crore in financial year 24, an increase of 28.2% on a year on year basis, and was 2.8 times the level of financial year 20. So what does this show? That the government has improved its infrastructure with respect to the capex. So you can see this picture also. This whole portion represents the total expenditure of the government. So if you see this financial year 21, in that financial year 21, the revenue expenditure with respect out of the total expenditure is 88%, whereas the capital expenditure was 12%. But now what has happened? The government has increased the capital expenditure out of the total expenditure of the government. So from 12% it has increased to 21% in the financial year 24. So you can see the hike with respect to the capital expenditure, which is a good sign that the government is investing a lot in the infrastructure, which is naturally helping the private sector and also the households. So I hope this is clear to you how the government expenditure helped in boosting, or it contributed to India's economic recovery in the post-pandemic period. So let us move on to the next point. The next point that the economic survey highlights is with respect to the digitization of public service delivery. So as per the economic survey, the digitization of various services also played very important role in the economic recovery in the post-pandemic period. For example, the different initiatives of the government, for example, the boosting of Jam Trinity and the different type of digitization, the promotion of UPI, all such type of things. How these things helped? These things helped in increasing the spending by the households. And when the spending of the households will increase, then what it is going to do, it is going to affect the money multiplier in the economy. And it, for example, if the households are spending, they are doing a lot of spending with respect to the purchasing of commodities from the e-commerce stores. So what is going to do, it is going to benefit the different type of MSMEs, different type of industry, and when the industries are improving, what it is going to lead to, it is going to improve the economic growth of the economy. So that's how, just a small example, how the digitization played very important role in the economic recovery in the post pandemic period. And the JP Morgan index, as highlighted in the economic survey, that the JP Morgan index also registered an uptick since October 2023, indicating a quicker expansion across manufacturing and the service sector. It means there has been an expansion with respect to both manufacturing as well as the service sector. So this is something, the role of the digitization that has been highlighted with respect to the contribution to the India's economic recovery in the post-pandemic period. And there is another data that has been highlighted in the report, the economic survey. You can just go through this data, nothing much to understand, that India saw significant increase in digital transactions, clocking around 100 million digital transactions a day worth $67 billion. So you can see the extent up to which the digital transactions have been increased, as highlighted by the World Economic Forum also. Fine. Now let us see the third point, which is regarding the Atmanirbhar Bharat Abhiyan. So Atmanirbhar Bharat Abhiyan, which is the self-reliance campaign promoted by the government. As you would be knowing, it was promoted especially during the post-pandemic times. And this Atmanirbhar Bharat Abhiyan, it focused on different sectors. For example, it provided funding to the agriculture sector and the MSMEs. It also talked about contribution to the labor reforms. So different type of initiatives or sectors were focused by the Atmanirbhar Bharat Abhiyan, and this Atmanirbhar Bharat Abhiyan played a very important role in aiding recovery and enhancing the medium-term growth potential of the country. So, for example, you can see the data also that the Atmanirbhar Bharat Abhiyan launched a package of worth rupees 20.97 lakh crore, which is a big amount, approximately 10% of India GDP, to provide a comprehensive economic stimulus. So it targeted different type of sectors. You would already be knowing that the different sectors that were targeted by the Atmanirbhar Bharat Abhiyan, and such a huge amount was contributed through it, and it helped in aiding the recovery of the economy in our country. And then there were specific initiatives under the Atmanirbhar Bharat Abhiyan, for example the emergency working capital facility for the MSMEs, which led to the disbursement of 3.3 lakh crore. So you can see out of around 20 lakh crore, 3.3 lakh crore was disbursed to the MSMEs through this emergency working capital facility to over 13.5 lakh MSMEs, which again provided relief to them. And when this MSMEs started working in a good condition, that naturally helped in aiding our economy in the post-pandemic period. Fine. Now let us see the next point, which is the improved fiscal balance. So despite expansionary public investment, fiscal balances improved due to tax compliance gains from the procedural reforms, expenditure restraint, and increasing digitization. For instance, the fiscal deficit of the government reduced from 6.4% of GDP in financial year 23 to 5.6% in of GDP in financial year 24. So this is something that played very important role with respect to the recovery period, because when the fiscal deficit of the government increased, the government when it got decreased, it helped the government in order to manage its public investment. For example, you can see in this chart also, you can see that in the year financial year 2019, if you are able to see this chart, is it clear to everyone? Is this chart visible? So if you are able to see this chart, you can see the yellow portion over here. This means this talks about the revenue deficit. Then the green portion is regarding the capital outlay, which is the capital expenditure. Then we have the net lending. Net lending basically means the lending that is done by the government, lending by the government minus the loans that it has recovered. So the recovered loans, so the lended loans minus the recovered loans, so it talks about the net lending. So the red portion talks about the net lending, and then lastly the miscellaneous capital receipts, which are basically the non-debt creating capital receipts, which are the part of our fiscal deficit. So if you see this whole diagram, so you can see that how our revenue deficit has decreased after the financial year 2019. So you can see earlier it was 70%, then it was 71%, then 79%, 65, 61, and 46.3. So our revenue deficit has decreased. So I hope you know what revenue deficit is, which is the difference between the revenue expenditure and revenue received. So what does it show? It shows that after a certain point of time, with the passing years, subsequent years, our revenue expenditure is slowly increasing. Sorry, our revenue received are slowly increasing as compared to our revenue expenditure. That is why what is happening, our revenue deficit is decreasing. And why our revenue receipt is increasing? You must have seen a lot of data with respect to the tax revenue. Tax revenue form a very important component of this revenue receipt. So because of the increase in the tax revenue, the GST collection by the government, which is a very important contributor of the revenue receipt, so the revenue receipt is increasing as compared to the revenue expenditure. And what it is doing, because of that our revenue deficit is increasing after the passing years. And another side, you can see that our capital expenditure, so our capital expenditure, which is the green portion, it was earlier 43%, then it was reduced to 33, then 17, then 33, then 35, and then you can see it has again increased to 47.6. What does it show? This talks about this first point, which I explained you earlier, the public spending on infrastructure. What the government is doing, government is doing a lot of expenditure with respect to the capital expenditure, that is building of infrastructure, roads, different type of promotion of manufacturing industries, so that more and more employment can be created in the country, and that will help largely in the contribution to the economic growth. So that's why you can see our capital outlay has been increased, the capital expenditure has been increasing, whereas the revenue deficit has been going down. So I hope it is clear to you. So this is something that I wanted to highlight through this diagram. Secondly, you can see the steady decline in the deficit ratios. For example, the primary deficit, you can see it has decreased. Then the revenue deficit also, which I've already told you, it has been steadily decreased. And then the overall fiscal deficit. So earlier in the year financial year 21, it was the highest, FD was 9.2, and then fiscal deficit reduced to 5.6 in the financial year 24. Fine. So this is something that has been highlighted as a part of economic survey. The next is regarding the private consumption and investment. I have explained you this point multiple times. It was highlighted in the RBI annual report also. It was highlighted in the financial stability report also. And now you can see the same point has been highlighted in the economic survey also. So I hope you remember this point, that how the private financial consumption expenditure is, it grew by 4.0%. And if you are somebody who is following this initiative, you know, you have seen the previous classes also, what you can do, you can you can accumulate some data, you can collect some data from the economic survey with respect to the private consumption expenditure, and from the financial stability report also. So that's how you can collect a lot of authentic data that you can eventually use in your examination. So the private final consumption expenditure, it grew by 4% in real terms. And for example, the urban demand was strong as a part of private final consumption expenditure, and the economic survey highlights that the domestic passenger vehicle sales and the air passenger traffic showing robust growth. So what does it show? That a lot of households are increasing their spending, and that is the reason why our private final consumption expenditure has increased. And you can see in this chart also that how as compared to the previous times, our vehicle sales in the rural areas have recovered since the pandemic. And you can easily see this graph, that how it has been recovered. And this shows the increase in the private consumption expenditure with respect to the rural areas. Then secondly, the investment, that is with respect to gross fixed capital formation, which is with respect to the fixed assets. So by private non-financial corporation increased by 19.8% in financial year 23, and the private investment continued to rise with Axis Bank research. So according to Axis Bank research, it has increased, it has shown increase by 19.8% growth in private investment across listed and unlisted firms. So you can see it in this chart also, that how the private corporations, their consumption, their investment has increased, and all these factors have contributed to the recovery of our economy in the post-pandemic period. Fine. So this is something that has been highlighted as a part of economic survey. The next is with respect to banking and financial sector, another important domain with respect to which I have talked in our previous sessions also, especially if you go to 2 to 3 sessions back in the financial stability report highlights. In that video, I talked about how our gross NPA ratio has decreased. However, how our return of assets and the return of equity with respect to scheduled commercial banks has improved. All such parameters, what these parameters have done, they have contributed to the economic recovery in the post-pandemic period. And the similar things have been highlighted in the economic survey also, that the gross NPA ratio of scheduled commercial banks improved to 5.7% in March 2024, down from 7.5% in March 2021. And capital to risk weighted assets ratio, which is CRAR, stood at 16.8% in March 2024, which is definitely above the regulatory minimum. For the regulatory minimum, you can write in the comment box that as per RBI, how much CRAR the scheduled commercial banks have to maintain. This is something you can write in the comment box as the answer. So just for the sake of your revision, so you can see that currently it is 16.8%, which is way above than what has been prescribed by the RBI as the minimum CRAR. And all these things have contributed in the improvement of the banking sector, which eventually has led to the improvement of the economy in our country, especially in the post pandemic period. So I hope all these points are very much clear to you. Now, the next point, the impact of global supply chain disruptions and geopolitical tensions on India's economic performance in financial year 2023 and 24. So, the first point that has been highlighted in the economic survey is with respect to the Red Sea crisis. So, for example, the Red Sea crisis, because of the different type of activities that were happening near the Red Sea. So, you must have heard about the attacks on the ships by the different type of militant groups that was happening in the Red Sea area, and because of that, it impacted to a huge extent to the global supply chains, the ships that were passing through this Red Sea area. So this is one of the important parameter that impacted the economic performance of the different countries, including the India. So the economic survey says that the escalation of the Red Sea crisis in that October 2023 led to global supply chains disruptions, attack on commercial shipping, increased global transportation cost due to rerouting of cargo, because if the Red Sea route is busy because of the militant activities, so what the ships are going to do, ships are going to pass through some another route, and when they will take the another route, which is obviously going to be the longer route, what it is going to do, it is going to increase the transportation cost of shipping. And when the transportation cost will be increased, what will happen, the goods that they are transporting, that those ships are transporting, the cost of those goods will also increase. For example, you can take the example of oil. If the ships are transporting oil and the cost of transportation has increased, so the oil prices are also going to increase, which is eventually going to cause increase in the supply chain pressures on the economy. So this is something that has been highlighted in the economic survey. Secondly, regarding the easing pressure, so the global supply chain pressure index, which measures the deviation from the historical averages, showed that supply chain pressures eased over time, and this contributed to moderation of goods inflation across various countries. So this is regarding the easing of pressure, the another impact of the global supply chains on the economic performance of the country, so as highlighted in the economic survey. The next is regarding the inflationary pressures. So with respect to inflation, the economic survey says that the global trouble, supply chain disruptions, and adverse weather intermittently stoked domestic inflationary pressures. However, administrative and monetary policy responses manage these inflationary pressures effectively. So this says that because of the global supply chain disruptions, there were increase in the inflationary pressures in the economy, in our economy. But what happened, because of the administrative measures and monetary policy measures by the government and the RBI, all such type of different regulatory bodies, because of them the inflation was mostly under the control. And I forgot to attach the screenshot. There is a pictorial representation in the economic survey that talks about the deviation of different countries with respect to their inflation targeting. And if you see that chart, I will show you tomorrow, or you can open the economic survey, you will it is very clearly visible in the first chapter. You can easily see that the deviation of the chart that represents the deviations of different countries with respect to the inflation targeting, and this chart says that the deviation of India with respect to its inflation targeting is very much less as compared to other countries. Fine. So this shows that the administrative and the monetary policy responses played very important role in order to reduce the inflationary pressure through the supply chain disruptions in our economy. And you can see the economy, you can see the example also. What is the proof of that? For example, our retail inflation declined to 5.4% in financial year 24 from 6.7% in the financial year 23, and the latest data also showed a headline inflation of 5.1% in June 2024. Again, very similar data that we had discussed in the financial stability report also. If you remember, I told you that how headline inflation has decreased, but the food inflation has increased because of the different factors that we discussed in that video. So you can see that how different parameters are very much interlinked to each other when we discuss different type of reports. And this is something that has been highlighted in the economic survey, that because of the administrative and monetary policy responses, how we were able to reduce these inflationary pressures. The next is regarding trade and external balance. So what does the economic survey say? The external balance was pressured by subdued global demand for goods. So the thing during the pandemic times was that there was decrease in the global demand of goods, decrease in the global demand of goods. And why it was decrease in the global demand of goods? Because of the different complex reasons during the pandemic we are all aware of, because of the rising inflation and the different type of things because of which the different countries were affected, and because of which there was the decrease in the global demand of goods. But with respect to India also, of course India also suffered, because if that there will be decrease in the global demand of goods, then our manufacturing industries are going to suffer. They will not be able to earn a lot of profit by exporting their goods. But what happened in case of India, even if we also faced a lot of trouble with respect to goods, but the whole effect, the whole negative impact because of the decrease in the global demand of goods was counterbalanced by the increase in the export of services from India. So even if there was decrease in the global demand of goods, how India was able to counterbalance that? By increase in the export of services. And if you remember the financial stability report, there I told you, I showed you the chart also, that how there has been the increase in the export of our services as highlighted in that report. So, same thing, same information you can use in your answer with respect to the economic survey also, that the same interpretation has been mentioned in the economic survey, that it was counterbalanced by the strong services export by our country. So the mercantile exports growth was modest at 0.5% compared to 2022, while the service trade surplus increased. So even if the exports of the goods, which is the mercantile export, it was modest at 0.5% only, but with respect to the services we were at the surplus. Fine, this is again another parameter highlighted in the economic survey. The next is regarding monetary policy changes. So the geopolitical developments and monetary policy changes across countries led to increased caution among investors, moderating FDI flows. So because of the geopolitical tensions, and also because of the monetary policy changes in the different economies, for example in the US and different type of economies with which the countries trade with each other, because of these monetary policy changes, the effect of this monetary policy changes was seen at the global level in other countries also. And the economic survey says that the global FDI flows declined in 2023 compared to 2022. But even if the global FDI flows declined, despite this, India managed to maintain macroeconomic stability aided by prudent policy responses from the RBI. So you can see another positive signal, that even if because of the different type of developments at the global level, the global FDI flows decreased, but India was still able to maintain the stability. Why? Because of the different type of administrative and monetary policy measures and the prudent policy responses from the side of RBI. We were able to stand against those different type of fluctuations at the global level. So I hope this point is also clear to you. And as you can see in the chart, that with respect to the weakening FDI inflows at the global level, so at the world level you can see as compared to a 2022, our FDI inflows have reduced. So this is another parameter highlighted as a part of economic survey. So now we are done with the body part. Now let us go through the last part of our answer, which is the conclusion. So India's economic recovery post pandemic is a testament to the effectiveness of targeted policy interventions, structural reforms, and the strategic emphasis on digitization and public investment. So I have taken this conclusion from the economic survey only. Most of the things I've taken from the economic survey only. So the ability to adapt and respond to global challenges has not only helped in overcoming the immediate impacts of the pandemic, but has also positioned India for robust and sustained economic growth in the years to come. To sustain and build upon the momentum of post pandemic recovery, India should, so what is the way forward? India should continue to focus on enhancing digital infrastructure and promoting innovation across sectors. Additionally, what India can do, it can strengthen global trade relationships and diversify supply chains that will be crucial in mitigating future geopolitical and economic uncertainties. So you can optimize this version of conclusion. You can write it in a within the proper word limit, and you can write your own version of conclusion also, which I would highly appreciate. So this is something that you can write as a part of the conclusion. So now we are done with the session, and this is the question, the answer of which you have to write in the comment box, and that will be evaluated by our team within 48 hours. So you have to submit your answer before Friday 5 p.m. Fine. So I hope it is clear to you, and in the upcoming sessions also we are going to cover the economic survey, different type of dimensions that have been discussed in the economic survey. Even if the direct question is not asked in the examination, it is definitely going to help you to broaden your perspective with respect to the different type of things that we can discuss. And of course it is going to help you in the value addition also. So I hope the session was helpful for you. Lastly, we have this EduTap blog where you will find different informative articles written by experts for a range of competitive exams that you're preparing for. You can go through our blogs and you will find relevant information on them. Fine. So that is it for today's session. Let me go through the chat box. Great, Jalak. Thank you so much. Welcome to Perspective 360 degree. And I would like to see your answer also. You can submit your answer before Friday 5 p.m. Yes, Jyoti, like capital expenditures. So nothing in the chat box. So now we are done with the session and I'm closing it. And yes, yesterday somebody has asked a doubt. Okay, I will clear the doubt in the next session. I should have, discussed it in the initial part of the session. I will clear the doubt in the next session. Somebody has asked few doubts in the comment box. So we'll talk about it in the next session. Fine. So that is it for today.